Oh, I wasn't expecting you, bruh.
No, I thought I'd come by and see whether you're ready so we could leave together.
I'm ready, let's go.
I'm so excited about today's topic. I spoke to Mom about accounting equations. I have no clue about it.
Oh, what did she say though?
She said it had something to do with owner's equity, liabilities, and assets.
Oh, okay. Let's quickly get a taxi. Let's go and then we'll discuss that later.
Okay, let's do that.
In Program 2 today, we take a look at the accounting equation. Our lesson objectives are that after watching this program, you should be able to state the accounting equation, explain the elements of the accounting equation, illustrate the effects of transactions on the accounting equation. Thanks for watching with us and enjoy the show.
Oh, look, there's Michelle and Frank.
Oh, I see.
Yo, what's up, guys? Cool, man, what's up? Siri Jita.
How are you?
How are you,
I'm good.
Michelle?
I'm good. How are you?
How's it
We
going?
good, bruh, we good.
Anyways, Frank and I were just busy brainstorming on accounting equation.
That's good to hear. I did research of my own and I found out that accounting equations has to do with owner's equity, liabilities, and assets.
Okay. But I think it also involves some forms of balancing or equal, I think. But anyways, what is accounting equation?
I saw it here in the book. Let me read it to you.
I think you said it all. Cause it says that accounting equation is assets equals owner's equity plus liabilities that is mostly used, or owner's equity equals assets minus liabilities, or liabilities equal assets minus owner's equity.
So total assets of the business is equal to total liabilities and owner's equity.
I see. And assets are a business's resources or things the business owns, like the cash register, the bank account, the stock, which is the inventory, and vehicle.
Yes.
While liabilities are the business obligations or amounts the business owes, like loans, creditors, bank overdraft.
And owner's equity is the amount of money that's left when liabilities are deducted from assets.
So owner's equity can also be money invested in the business by the owner, plus income received and minus expenses paid out.
Correct, Cecil. That is why it's important for business to keep accurate record of accounting equations so they can always balance. That's why it will mean the left equals to the right.
To fully understand the accounting equation, you should know all the asset accounts: fixed assets, current assets, and investments. All the accounts represented by the owner's equity, capital, and drawings, and all the accounts that are represented by the liabilities, long-term liabilities, and current liability accounts.
Okay. But now, what are the elements of accounting equation?
The three basic elements of accounting equation are assets, liabilities, and owner's equity, which is capital. The assets represent the things of value that a business owns. The liabilities are the claims of the creditors against those assets. The owner's equity, which is capital, is the claim of the owner against those assets.
Can you please give some more examples to bring more clarity?
Of course. Assume we decided to start our tax motor business. The new business started on the 1st of January and we invest 50,000 in it.
The business unit has borrowed 50,000 from its owners. This is the first transaction of the business. It brought a double change in the financial position of the business. An asset or cash increased by 50,000 and an owner's equity also increased by 50,000. In other words, this transaction is consisting of two elements: the receipt of 50,000 cash supplied by the owners of the business.
I can see that this transaction has affected two sides, the assets and the owner's equity.
Let's look at another example. Here's one. Say you buy goods on credit for 4,000. What would the effect be on the accounting equation?
Well, I think the effect it will have will be owner's equity. The owner's equity will decrease because purchase is an expense with 4,000 Namibian dollars, and liability will increase. Liability is the creditors with the same amount. What if we buy goods by check?
That's a good question. Let me see. The effect it will have is that the assets will decrease or let's say bank decreases with 4,000, and owner's equity also decreases with the same amount as purchases is an expense.
I see, Frank, you're getting good at this.
I know, right?
And another example we can also give in regards to our own business. Let's say we pay our creditors with check with $4,000. What will the effect be?
I think the effect it will have is a decreased asset, which is the bank, with 4,000, and decreased liability, which are creditors, with the same amount. Am I correct?
You are absolutely correct, my friend.
Yippee! Now we should also think about if we repair our motor vehicles and receive cash. How are we going to record this? Let's say we received 3,000.
The effect will be an increased asset, which is cash, and an increased owner's equity, which is current income for 3,000.
Oh, I was wondering whether it will increase on both items, but I think I understand now.
On the other hand, if owner takes money out of the business account for his own use for 600, what effect will it have, Cecil?
I think there'll be a decrease in assets, bank, and a decrease in owner's equity drawings.
Bravo, Cecil. Bravo, man. You're getting a grip of this.
But what if we sell goods on credit? So are we dealing with the debtor then?
Let me see. I think I saw some of that. That's correct. Say you sold goods on credit for 8,000, then your assets will increase with the debtors, and your owner's equity will increase with the same amount with sales.
Wow, that is so interesting. Thank you guys so much for this information. Hi, ma'am. Yes, we are done. Okay, see you soon. Bye. You guys, I have to go then.
I also have to go.
Wait for me. I'll take a cab with you.
Okay.
Okay, cool, Cecil. See you
Next
tomorrow.
So, viewers, before we say goodbye, we must highlight some more points on the importance of the accounting equation. The accounting equation states assets equals owner's equity plus liabilities, or alternatively, owner's equity equals assets minus liabilities, or liabilities equals assets minus owner's equity. The elements of the accounting equation are assets, owner's equity, and liabilities. Every transaction has two or more effects on the accounting equation. If a new business is started and the owners invest capital in the business, the effect is asset, cash increased, and the owner's equity also increased. If goods are bought on credit, the owner's equity will decrease, purchases expense, and the liability will increase, creditors. If goods are bought and paid by check, the effect is owner's equity will decrease, purchases expense, and asset will decrease, bank. If you pay a creditor by check, the effect is decreased asset, bank, and decreased liabilities, creditors. If you repair motor vehicles and receive cash, increased asset, cash, and an increased owner's equity, current income. If the owner takes money out of the business bank account for his own use, decreased asset and a decreased owner's equity. If we sell goods on credit, assets will increase, debtors, and your owner's equity will increase. And with that last bit of advice, it's time to say goodbye. Viewers, I hope you have enjoyed watching and learning with us. See you again soon. Bye-bye.